Morning, everybody. A little later start than I usually have. Not sure who's gonna join me with a late start, but here we go. I didn't have to get my typical weekend in, so I might do some analysis live, um, looking at certain things. But I mean, overall, obviously the market's like very weak. We closed below the 200-day moving average on the SPY. Um, we got war going on, yields. I mean, the story, right? Fed holding that one rate hike in his pocket. So we'll go over some things today. I think I might leave out some intricate details of the day, maybe look at a broader view today, and I'm not sure what the plan is. Getting a little late start. My daughter's been a little, she has problems with her asthma, so she's probably going to stay home today. That's causing the delay. And without further ado, let's get into this. Welcome to my channel. My name's Steven Gonzalez. I use volume profile and market profile to find structure in the market, along with supply and demand, gamma exposure levels, the most traded price of the week, the year, the month, the previous day, and today we'll look at maybe the last 5 years. Okay, that will kind of give us a hint of where the market could possibly go. All right, so that's where I like to look at. Price action can fool you very easily. Of course, you can subscribe and you can set an alert. Okay, also, if you enjoy my content, give me a like. That would be much appreciated. You could always follow me on X at Gonzo719 as well. Okay. We can get right into futures watch list here. Let's do that. All right. So Ether up 4%, Bitcoin looking to get out of this 30,000 level. Remember, I said this is probably going to cause a battle here in Bitcoin. 30,000 is a big level. The move will be huge, either back down or up, but it's not just going to break out and go nuts. Okay, but it's up 3.69%. The VIX, we had a 22 VIX. Okay, fear is back, up 1.84%. 10-year yields up a percent. Unbelievable, right? Heading towards that 5%. We saw that briefly, but that's going to keep weight pressure on tech stocks. Okay, gold actually took a little dip, but now it's recovered. It's only down 0.07. Dollar is slightly down to flat. Crude was down more. Now it's only down 0.17. All right, Russell's down 0.34. ES down 0.36. Nasdaq's down 0.41. The Dow is down 0.42. 30-year bonds being sold. That was down more earlier, but it's only down 0.58. And silver is down 0.63. Okay, moving on. Stocks I like to day trade and swing trade. Okay, coin is up 2.21%. Key level is 75. Holds over that. Now, coin's got a messy chart, but it has been consolidating, so a big move could be happening. Netflix obviously had good earnings, so that's still showing some strength. And let's see here. Let's go for laggards. All right, laggards. We have Tesla. Still, Tesla's been getting beaten down 0.89 as you can see. Roblox down a percent. I'm looking at 30. That level 30 needs to hold. Snow's down 1%. Okay. Um, Now, Snow probably attributed to possibly Salesforce with the cloud stuff getting a downgrade. Okay. So that's down a percent. Right. AMD was down a lot more earlier. It was down almost to 100, but markets recovered a little bit. No surprise there. We were gapping down. Okay, so let's move on. Okay, move on. Top sectors. Top sectors. We have no leader really. I mean, Cat is basically not doing anything, unchanged really. And let's just go to some laggards. All right, some news. We got Chevron down 0.84. Probably simply, Exxon, probably simply with Chevron. There's that downgrade in Salesforce, down 1.63%. Okay, now Chevron has it's launched a bid to acquire Hess. So that's going to weigh down on the stock, down 2.48%. That's why that's happening. Okay. Now let's look at sectors. Let's see. No leader really. Just healthcare and communications are flat. Okay. And we got some laggards: semis, real estate, basic materials, and energy. Okay. So heavyweights a little weak. XLK, discretionary down, right? Financials only a little down, and healthcare is defensive, so that's kind of flat. All right. So that is that. That is as far as the watch lists go. As far as some news and economic calendar. Let's look at that together. All right. So what do we have this week? So today we have Chicago Fed at 8:30. We have Tuesday S&P Global Composite. Not much there, but Wednesday we got Fed Chair Powell speaking, but he's speaking at 4:35. So that's not going to really affect the market. Obviously, it will. Future closes at 5 o'clock. Okay, so futures will move around at that time, but the market will be closed. So you get new home sales that day as well at 10 a.m. Thursday, what do we have? Durable goods, GDP. What else here? Initial jobless claims. Fed Waller speaking, and pending home sales at 10 a.m. Friday. Now this could be a market mover, right? The core PCE. This is what the Fed looks to look at for inflation. So core PCE, personal income. Fed bar speaking. Michigan consumer sentiment at 10 a.m. Okay, that's what we have going on this week. Now we have earnings this week. Okay, big earnings this week. Let's look at it. Okay, today. Let's see if anything to note. Stocks we talk about, not really. Today's not really. Okay, but tomorrow, before the open, you got Coca-Cola, you got Verizon, you got GE, RTX, 3M, Spotify, Nextera Energy, okay, GM. That's before the market open. After the close, Microsoft, Alphabet, Snap, Visa, Teladoc, big earnings week. Okay. On Wednesday, you got Boeing before the open, T-Mobile, Hilton, ADP. All right. Then Wednesday, after the close, Meta, IBM, ServiceNow. Okay. What else? Thursday, Royal Caribbean, UPS, Hershey, Altria, Southwest, Valero, Merck. All right. After the close on Thursday, Amazon, Enphase, Intel, Ford, Chipotle, Skechers, United States Steel, Capital One. And then Friday before the open, you got Exxon, AbbVie, Chevron. Big earnings week. Okay, Colgate. Big earnings week. Okay, so tomorrow before the open, and then every day pretty much you're going to have some type of heavyweight. All right, but the big ones obviously are Microsoft and Google tomorrow after the close. Okay, those are the really after the close on Tuesday. And then after the close on Wednesday, Meta. All right. That's the look at earnings. Okay. That's the look at earnings. Quick go into news here really quickly. And Hess is rising because of the Chevron bid. Apple looks like it's a major supply of Apple. Foxconn, a major supplier of Apple's iPhones, face a tax probe in China. Okay. What else we got? Tesla stock fell 1.5 if the EV manufacturer said its capital expenditure for 2023 would exceed 7 billion to 9 billion target it had laid out earlier. Okay, Pinterest stock rose 2.4 after Stifel upgraded the image share company. Walgreens stock rose 3.1% after JP Morgan upgraded the pharmacy chain. Okay. And Salesforce, there's that stock fell 1.9% and Unity Software dropped 3% after Piper Sandler downgraded both software companies to neutral from overweight. All right, there's a couple things in the news. Okay. Let's just move over to the daily charts. Actually, we can scope some news real quick and to see if anything else that I missed. Let's just do that together here. So there's the Chevron news. Let's see, we'll just scroll down. Let's see if there's anything else. Anything else that I didn't mention. Let's see. Not looking like something else that I didn't mention that's that important. No. That's about, oh well, it says MasterCard further expands consulting services with AI. I mean, AI, that's kind of fizzling. That AI bubble. All right. That's about it. So let's just go over to the daily charts. Let's go over to the SPY here. And let's just look at this. Okay. So we closed behind the 200-day moving average. All right. We're right at these lows. Right there, right? So right at those lows. Okay, now in SPY, this is why I have the volume profile up here on this chart for you guys to see, because we're going to talk about where possibly we could go in the SPY. Okay, this is how you use volume profile. Okay, so you can see the 200-day moving average here, right? Most trader price of the year, of the rolling year, is 411. Okay, if we break and start to hold, we're probably headed for 411 in the SPY. That will be our pause and will determine Santa Claus rally or not. Okay, but that could be definitely a destination. Huge volume, high volume node here. Markets go into these high volume nodes, they're magnets. Okay, notice the other high volume node we just left. See, we're just consolidating up here. That's where that gap was, right? Around 436. Well, we're hitting this support right here, right? And the next destination would be 411. Okay, that's what I'm looking at as far on the daily chart. Okay, now where are we at now? So we can zoom in a little bit here. We are at 420. Now we previously we were gapping down a lot more earlier, but we're still bearish. We're still down here. Okay, so the real key for the market today is, do we jump up and touch this 200-day moving average and test it, right? Or we don't and we start falling, or we move sideways. There's a lot today, because look, 3 selling days. Okay, now you're gapping down. Now I talked about a little bounce on Friday. This definitely 3 selling days in a row with a gap down. You're looking for some relief. Okay, so the relief could come with a bounce up to the 200-day moving average, which is about 422, or at the bottom of the lows, 421, and just see. Okay, just see how the market handles that. Okay, so that's the SPY. Okay, we can look at weeklies here. Let's look at weeklies together. This is a weekly profile. Okay, the most trader price of the last 5 years is 443. So we're below that now. Okay, here's that node, high volume node right here, 411. This is on weekly chart. Okay, we're now, I always use the 10-week EMA. We closed below it last week, and we closed way below it this week. Okay, so that's how we're looking at on the weeklies. There's monthlies. Okay, that big candle, we're heading towards the bottom of this monthly candle, and what's the low of that candle? 416. Okay, so this is June's lows. June's lows. Can we take that out? Have to see, right? And this is just the volume profile of the last month. Okay, you can see here most traded price of the week and most traded price of the month were lining up here at one point, and then it broke, right? No surprise there. All right, let's look at the Qs together. Okay, so here's the Qs volume profile. Most traded price of a year ago is 364. See, we're below that now, and we're at a key support as well here. Okay, you can see that right here. We're below all the moving averages except the 200-day moving average is rising. It's at 337 right now. Okay, the next stop could be 348. This support here in the Qs. Okay. Now again, I've talked about this before. There is very poor structure here in the Qs. Okay. Right in here, you see this here? This move up? There's not a lot of consolidation here. It just kind of moved up. If you break 348, obviously the 200-day moving average is here. If you come down to 348 and this doesn't bounce and we break, you're going to test the 200-day moving average and you could find yourself at 321. Now I do understand seasonality wise, you usually rally in November to the end of the year. Is this time different? I don't know. I have no clue. Okay, I'm just giving you what I see. Okay, let's look at a weekly. So weekly, the most traded price of the last 5 years is 364. Okay, right here, high volume node, right? We're below it now. And see this weak structure? You could even see it better on a weekly. It's just weak. You really didn't, you really just went right up, right? That's the key. Can we break that and do we fall back to 321? Don't know. Okay, don't know. See it on a monthly. So we're monthly, look, lower low, lower low, lower low. And now can we break these lows of the previous month, which is 351? Can we go to the bottom of this candle, right? Which is the low is 346. If you take back this candle and you take back this candle, that's 321, okay? So very, very interesting. That's the profile of the month and the week. Very, 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 very interesting. You can see we're back at the most traded price of the month, of the rolling month, right here, 355. No surprise there. Okay. Now, so that's the spine, the Qs. Okay. Looking at structure, where can we go? That's really that. Okay. Now, as far as the top sectors, let's look at those real quick. Okay. Let's look at where we're at with those. First big one is XLK, 28% of the S&P. Okay, so XLK, most traded price 168, right? We got this swing low here. We're not there yet. So the XLK is not as actually weak as the triple Qs, which is very interesting. Okay, which is very interesting. If you go to the weeklies, okay, we got that swing low here that has not been tested yet. We'll have to see below the 10-week EMA. All right. So that's the XLK. So we're not looking. We have more room to the downside a little bit. I feel in the XLK. All right. Second is XLV. Let's look at that together. Now look how balanced this profile is for the last year. This is very balanced. Okay. 133 is the most traded price of the last year. Very, very balanced. Okay. There's a key level here at 127. Let's call it 127. We are around there now. Okay, so XLV quite a little bit, hit the 200-day moving average, okay, then fell off, and now we're looking to test this level again, 127. That's a very key level. Now remember, XLV is more defensive. That's more of a recessionary play, right? Everybody gets sick, unfortunately. So let's look at weeklies. Okay, let's look at weeklies. So let me just put the volume profile up for the weeklies. Okay. Most traded price of the last 5 years is 133. Okay, so these are that key support, 127, and the next one is 124. Okay, so you can see here we just do this in healthcare. Boop, 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 boop. That's what we do. Okay, so healthcare is a little weak, but it's kind of in balance, right? We saw that it's kind of in balance, right? We're kind of at the value area. We're right below the value area. So if If this hits again and starts to go up, now remember, people might want to start collecting some healthcare, because if next year we have a recession, you want to own some healthcare. Okay, that is healthcare. All right, let's look at financials. That's the third largest weight. All right, most traded price of the last year is 33. Okay, in balance. You see this profile literally in the middle, and now we just fall, which is normal. If you're in the balance, you're gonna work away from balance eventually, and we did. Okay, testing this swing low here. All right, key support level here is 31.66. This consolidation, it's the bottom of this consolidation. Okay, that needs to be tested. So that's, look, this has farther room. Okay, let's look at the weekly. All right, if you look at the weekly, we're in the middle of a big range here. You can see it, right? Big range here. Okay, there's the big support is $30, $30.39. Okay, we just broke through the 200-day weekly. Right, so you have to see, can we move down to 31.66? Ultimate support 30.39. Okay, so I feel we have a little more room here. Look at the monthlies. Took out this candle, took out. Now can you take out this candle, this monthly? Okay, so nothing's looking great here. Look, this is the profile of the last month. We moved away from the most traded price of the month, right here. Boom, went down. Okay, so that's how we're looking. So far we got XLK is kind of weak, right? Healthcare is weak, but remember, it's kind of at an area that you might want to nibble at it. All right, so interesting, right? Still weak though. It's not strong. So let's go to the fourth one, discretionary. All right, discretionary. Now discretionary, you can see, is getting hammered. Okay, you had this big consolidation, and I said we had this little fake out breakout here. And then if you look above and fail, that's what that's called, and you traverse the range, what we did, well, look what we did. I said usually go the width of this balance range lower, and that's kind of what we did. Okay, so with Tesla, Amazon, that's what discretionary. Home Depot, you slice through the 200-day moving average, right? Look at the most traded price of the year, 145. Look at this consolidation over here. That could be the destination, 145. Okay, so very weak in discretionary. It's the fourth largest sector. Very, very weak. Let's look at the weeklies together. Most traded price of the last 5 years is 145 as well. So I think that's probably a reasonable destination. So far, it looks like we got further movement to the downside. It doesn't mean it happens today. That's what it looks like. It doesn't mean it's a prediction. That's what it looks like. You could have farther room to the downside in these four sectors. Okay, and then we can just look at semis. It's not the largest weight, but it's something you want to look at. Okay, and we'll look at the daily first. Okay, so most traded price of the rolling year is 150. We pushed up above that, couldn't hold it, and now we're back down here, and we got to see if we can test this 140 level here. Okay, now semis is very similar to the Nasdaq. You look at the structure, it's very poor. Look at this move up. It's a gap, and then we went up higher, right? We are coming to test 140. 200-day moving average 136. So very similar to the Qs. This is poor structure here. This could very quickly go down to 131. Okay, let's move on. This is the weeklies. All right, you can see this move here in the weeklies from 87. It's just been higher low, consolidation, hit 161, and now if you break that, like I said, you can come down here. All right, you come down to 131. Right, most traded price of the last 5 years is 54. I wouldn't really pay attention to that as much as these large volume nodes, 125, 135. Okay, that's semis. So you can see semis in the monthlies. Big candle here, right? That's a huge move up. Right, so that's what happened. That's what's going on in semis. All right, now we know 10-year yield is high. We know VIX is high. So I'm not going to go into that. All right. So we're gonna go start right into the market profile. We really need to see our structure in the market right now, what's going on. Okay, let's get a game plan going here. All right, just give me a sec. All right, let's see here. Let's look at structures, which is very important. Okay. All right. And I have a little extra time today because I'm probably gonna keep my daughter home today, so I don't have to. I would have been gone already. So let's look at structure. Let's look at what we're doing in the last rolling week. Okay, let's look at the profile. Okay, you had a lot of value area still up here. See the light blue? That's 70% of the trade in the last rolling week. Okay, very, very bullish imbalance, which means that a lot of people were caught up there. And then distribution, distribution, and now you have excess. Okay, so we got some excess. You're running out of participants here. Okay, so you got large volume here and little, 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 and now we're down here and we hit a demand zone. Okay, now very important. This is the most traded price of this year. 42.40 is the most traded price of this year, and we're back under it. Okay, and we're back under it. So very interesting here. Now, very important to look at. You have an overnight low, which is right here, making a new low. Generally, these overnight lows are not secure. You usually don't make a low in the overnight. Okay, usually you break this in the real-time trading hours eventually and make a low there, but usually not an overnight. Okay, so that's one thing that I'm looking at. Okay, now remember, you still have this big level. It's the most traded price of this year, 42.40. That's going to act as a little bit of a wall there with supply. Okay, and we'll get into the structure and futures as well. Okay, so let's look at what we have here. All right, and we want to look at a couple of like inflection points on the charts. So this is our overnight low. Here's our overnight highs. Okay, now like I said, we're gapping down with 3 days of selling. I would expect some type of relief bounce, some kind of dead cat, some bounce. Okay, selling, 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 gap down. I'm expecting, it's not easy to trade those. I'm expecting probably some type of bounce. It could come obviously after initial selling, but that's kind of what I'm expecting a little bit. But let's see. Our environments always change. So, but people's emotions don't. So here's the open and the overnight. This is the only long activity to all this short activity. What is that telling me, right? We're about 85 to 90% net short in the overnight. Now, price, right, is in the lower third of the overnight. Okay, gapping down. Now, in order for some bounce to work, you want to see price down here or down here when we open. Okay, because you want all this shorts. You got shorts all in here, right? Shorts are getting paid right now. So for that reversal, you want to see the market kind of push down here to maybe get that little relief bounce. Okay. Okay. Now we looked at that. So we got overnight. We're overnight 85 to 90% short. Okay. We're gapping. So quick breakdown of gap rules. Okay. Here's your gap. That's your gap fill. Okay, so that's really what you want to see here. This is how you're going to judge the strength of this gap. Okay. Okay, let's talk about it. Okay, if sellers are in control, right, the most bearish thing you could see is a gap and a go. A gap and go. You also have an unfilled gap down here. Okay, now gap and a go is the most bearish. If the market comes up, fails to fill the gap, also showing strength for the sellers. Okay, if the market fills the gap and can't go into range, that's also a point that probably people will step in. And the gap lines up with the most traded price of this year with the supply zone. So it's a pretty strong area. Okay. Now, if the market fills the gap, pushes into Friday's range, that now the sellers are probably not as strong. Okay. So that could provide the relief. Okay. That's how you have to look at the gap. Okay. But this is very, 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 very key level right here. Okay. That 42.40 level. Also happens to be overnight halfback, which is the 50% of this overnight move is right here. Okay. Keep in mind, the move lower on Friday, the midpoint is 42.73. That's the 50% Fibonacci of Friday. Okay. I'm not a fan of shorting in this hole. Right? Short, 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 short. I need some kind of, for me to be interested to go down. Okay. Just because you're not going with a high probability move and it could go, it doesn't mean that it couldn't. But trading's about probabilities. All right. So let's just get into some scenarios here. All right. Let's get into scenarios. All right. So we got a demand. We got a naked VPOC down here. This is a naked VPOC. That just means it's the most traded price of a day that has never been touched. All right. And usually they always get touched. So market's here. Okay, so like I talked about, if you want to see a reversal, 3 selling days and now you're gapping down, right? So if we move down again and we test the overnight lows here, we're still in demand. We could tag this naked VPOC, and if we start to recover, higher low, higher low, higher low, definitely could see a move right into this area, this pivotal area. Okay, most traded price of the year and supply. That's a very pivotal area. Okay, if we take this supply out and hold it, you could possibly move up to the overnight high. Okay, I don't know how much move. We were very volatile, right? Right. Obviously, we could push up into this supply, but I'm not sure. I'm just saying this looks a little ripe. Okay, because if you just look at the chart, you have shorts all the way from here, 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 getting paid. Okay, eventually they're going to take some profits. That's just the way it works. All right, so odds on a relief bounce are probably pretty high. Just how much, I don't know. Okay, but that's what I'm looking at for there. Okay, and now in a bearish play. Okay, bearish play. All right, you can now obviously you can gap and go, and maybe we fill this gap. I don't know, right? That you have to have that in your scenario though. So like I said just before, we could push down here, do the same thing, pop into this area. Remember, you have the gap fill here. You have supply. You have the most traded price of the year. If you pop and fail and go below this, that could be the move back down. Okay? That could be the pop to short. Obviously, you could still, price can come down, move up into, take that out, and then have problems with the overnight high. And there's supply here. Okay? And we could roll. But just one thing to note. Okay? And I should have talked this on the bullish play. Okay, if the market does do this and recovers, takes out the supply, this right here is the most traded price of the overnight, right around here, around 42.55 about. If you take this out, that's the shorts from the overnight. That's the most traded price in the overnight. You're gonna move up. Okay, just keep that in mind. All right, let's move on to the Qs. All right. Alright, let's look at this real quick because I got to start prepping for the day. Well, this is part of my prep that I don't do in front of you guys. So let's look at the NASDAQ. All right, we got a profile, got a little bit of excess at the top here, big node, little distribution here, little distribution here, and then we have some excess, right? Put in here. Okay, that's what we're looking at. All right, we're below the most traded price of the week. We're below the most traded price of the month. That was a pivotal level I talked about on Friday. Okay, so we're below all that. So very bearish, right? Very bearish. But we have some excess here. Remember, overnight lows usually not secure. This is an overnight low. You usually revisit that. Okay, usually that will not be the low. And I'm not saying it has to get taken out today. It could get taken out tomorrow. But usually that's not secure. Okay, so very similar here. It's actually very, very similar. The same kind of setup. Okay, you have the most traded price the overnight here. You look, this is the only long activity, this much short activity. We talked about that. Okay, so I'm not going to get into that. We got the gap. Now this one is very close to the gap fill. Okay, now the difference in here is you're at the midpoint of the overnight. Okay, so the Qs are stronger. All right, so the edge of the reversal is almost gone in the Qs. Okay, so we got the gap fill here. So, and you got big levels here. Most traded price of the month here. Okay, similar to the most traded price of the year in ES. Big levels. Okay, so let's talk about it. And I think it's very simple here. Again, it's the same thing, I'm going to say. So it's pretty similar. So let's talk about a bullish scenario. So what you want to see if you're like looking for that some type of reversal, you want to see the market be down here, push, break these overnight lows, and then start to recover higher low, higher low. And you have to really look at the internals to see if the market really is getting some strength and it's not fake strength. And then you can possibly fill this gap. Okay, right here. And your next move would be into this supply and see if you could take this out. If you take out the supply, you're probably going to move right up into here, the most traded price of the month. That's what's going to happen. Okay? That's what I see happening there. Okay? As far as a bearish play, here's your area to look for. Okay? Obviously, we could gap and go, make it very weak. Right? This possibly is a good possibility. Do I say it's probable? I don't know. You have a lot of selling. Okay. However, if you come down, this is the area to defend for bears. Now, obviously, you have a gap here. You could fail there and fall, right? But if you move up into the gap, into the range, this is really the area, right? Because the overnights here have shorted here. If you pop above that, you're going to get into this area here. So real quickly, because this is the bearish scenario, gap and go, push up into here, we could fail. Right, but if you break out here, you got this big level to contend with. 50% Fibonacci levels also here. Supply, you fail here. This could possibly roll us over. Okay, roll us over. Maybe we balance off here. I don't know. Possibly could move lower, but that's what I'm seeing here. So you need those pops. Need some nice pops in order to really get a nice selling. Okay, that's what I'm seeing here. Okay, as far as structure goes. Okay, that's going to wrap up those scenarios. Not sure who I have left with me here. We'll wrap it up here. Okay. Yes, this is the structure here. Okay, so now every blue profile is a weekly. Every white outline profile is a monthly. And then you got 4-hour candles. You got monthly VWAP. Okay, on the right here, just real quick, the white profile is this year. The heat map profile is a year ago. So that's how I just look at structure really quickly. This is like my express map of structure. All right, so in the futures, you can see we're below the most traded price of this year and of the rolling year. That price is 42.45. Price is right here. Okay. I talked about this on Friday, where we could possibly go. Well, that's where we are. Okay. Next volume node is around 41, I don't know, 20, I think here. If we stay under here, we're most likely going to revisit that. They're magnets. Okay. That's how it works. So that's what you look like in the futures. Okay. Now, if we look at the NASDAQ, here's that structure that I'm talking about in the Qs, in the semiconductors. It's the same thing. Okay. Here's that big level above us, 15317. It's the most traded price of this year and of the rolling year. Right here. See how we fell away from that level. Now, look, we're at monthly lows. Look at the monthly lows. The last month's monthly lows were right there. Okay? Below us is not good structure. This is what happens, that vacuum here. Okay? You don't have good structure into down here. Now you need to really push, consolidate, and push to get down here, but that's what will happen. And if that doesn't happen, we do one of these fake outs, we're going back to here, to this magnet, to the most traded price of the year. So that's the structure for everybody. Okay, that's how you really quickly look at it. Use volume profile. Large volume, those are magnets. Markets tend to balance around them. Low volume, the market tends to push through them. Okay, that's how it works. Either in balance or you're in excess. You're in balance, you're in excess. Okay, so hope everybody enjoyed that, got something out of it. Okay, subscribe, set an alert. Okay, if you liked what you saw, give me a thumbs up. You can follow me on X at Gonzo719. All right. I wish everybody good luck. All right. Be patient. Today's Monday. All right. Market gapping down. All right. That could really cause fear, more fear when you see a push down. Now we have some relief. So emotions run high, right? So like if your people go short, 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 you know, watch for some bounce. It doesn't have to happen. Okay, I'm gonna have to really be patient. It's hard to be patient too. So everybody have a great day, and I'll see you guys tomorrow.